So, thanks everybody for coming again. Always a pleasure. Sorry that last week couldn't work out. Sin and I were busy both, unfortunately. I know it was some rough week or rough 2 weeks since a huge market crash, but yeah. Now we are back here. So, thanks for coming. Um, Mostly I want to talk today about somebody requested anyways, which is like risk management. It's also in the forum and in the question forum. And yeah, I was dealing a lot with risk management topics in the past, obviously. Probably otherwise I wouldn't be around any longer. And I dig a bit more lately and also shared some pretty good videos or audios actually from YouTube from a very famous Wall Street guy. And I can really recommend those materials. I also added them in the knowledge library for everybody to get back to those. But nonetheless, want to repeat this, enforce it, or reinforce it, and try to, yeah, bring those topics across to you guys with my own words. Yeah, and maybe have a dynamic discussion around it. But before we get to that, I would, yeah, just ask upfront if you have like immediate questions that are begging you or nagging you. If it's not like how high we're gonna pump, how low we're gonna dump, that's the everyday question. But if you have like dedi dedicated charts you want to talk about or other things, yeah, let me know. Feel free to use the chat or just speak up. No need to be shy. And then let's try to find a way through these questions. Yes, JX Rock, I can elaborate on this. We talked in this, I guess, second last live session very intensely about it. So I recommend you watching this specific one in a whole, but nonetheless, I will just go through a few examples just right now. Maybe a bit quicker because the very long and excessive talk about it was, yeah, we did that like 2 sessions ago. So it's a watch. I don't know if you watched it yet. If so, then maybe you can be a bit more specific. Yeah, no worries if you missed it. That's why we record everything and upload it. Meanwhile, I also started putting notes or bullet points for every live session so that people can figure out better which session is worth a watch for what topic. So, we also develop as everything grows and goes on. So that wasn't like that from the very beginning, but doing it ever since, and we'll keep going. We'll keep doing it from now, but nonetheless, I can talk about some basics again right now. It's good to come back to those basics every once in a while, and yeah, keep keep repeating basics can lead you to better fundamentals to, yeah, take advantage of more advanced stuff. Um, so yeah, basic one versus one um, is, so what is anyways like in X versus X? What is it? It is basically if candle body, the whole thick part of any candle, that's the candle body, engulfs the prior candle on that time frame in the opposite direction. So, that's a very, very large engulfment, but still it is. Maybe we have a more visible example here. So if we have, for example, this candle here, it is a distribution candle or selling, and it gets engulfed with the whole body being bigger than this one at closure. So only closures matter. And so this is 1 versus 1 fib trade. And the technical entry and exit would be here. So as soon as this candle has closed, it will create a fib trade, which is a 1 versus 1, because one candle engulfed is getting engulfed by one other candle on the exact same time frame. And it will put an entry at this line here, at the so-called hold level of the engulfed body. And the exit is when you take the fib tool and you draw it from the wick low, from here, to the top part of the body, from the candle that is getting engulfed. That's why I keep the dotted line here, so one can see it a bit better. That's how you draw the fib, and your entry from this principle will be this line here, so the 1, and the exit will be the 1.618. It's a tiny long scalp, but if you do those scalps frequently or many times, if the whole chart situation is in favor to do so, then you can accumulate a lot of small gains and actually have a bigger gain in the end. And the 1 versus 2 is basically just that if you have a candle or like the same setup here, 1 versus 1, and then the next candle is also in the direction of the engulfing closure, is from a probability standpoint has a good chance that it's not a fake out or not a high risk trade, because on itself those 1 versus 1 engulfments can be risky depending on where they happen and how they happen. And some backtesting has shown that if you get, or a lot of backtesting actually has shown that if you get a second closure in the favoring direction of the engulfment, then that trade gets a much higher probability of playing out rather timely. So that's why it is called a 1 versus 1 fib trade. What settings do I have for the fib tool? I have multiple templates for the fib engulfments, entry and exit. I can show you. I just mostly deleted everything for this, so I don't have as much noise. I can share it in chat if you want. Did that answer your question, JX Rock? Otherwise, please ask again, and then I maybe can explain in more detail. Hi, Charlie. So to give a counterexample of 1 versus 1s that you should not always take just because they are there. Yeah, for example, this one here. I mean, if you have shorted this, because this is also 1 versus 1, this short, this candle, this accumulation candle, and its body get fully engulfed by this distribution candle. Technically, after the closure, the entry for the short is here. But yeah, obviously that pump would have at least make you sweat a lot. Nonetheless, it came back to exit later, and that's what the fib statistics show. They have a over 99% probability of playing out over time. But you obviously want to min-max your chances in which ones you take that are playing out in time, and not to either sweat a lot around here and then eat a stop loss or any kind of loss, to then just later see it play out and be double mad because you've eaten a loss and your trade was right. And also you would have waited a long time. And the simple reason is you were trading a bit against a trend here. So it was a low probability and a high risk trade. It is a valid 1 versus 1, and as you can see, it hit the entry and the exit eventually. But the setup on itself was not good, and it was also not a 1 versus 2 setup, because otherwise you would have gotten a second distribution candle here. And then you could have considered taking on the next candle the entry for the exit. So, and you were also like trading against the current trend change, because I mean, the chart was obviously showing support here. You can see it all the way from the left. You get the support here. It's accumulating even below, above those wicks, and it tries to put a trend change in. I mean, I'm not pretending that I would have seen this massive candle coming, but even if you just go back in time, before you know about the pump, you wouldn't have wanted to take this after the closure, because the chart is already trying to establish a trend change here. So that closure is a valid trade, yes, and the statistics say it will play out over time, but doesn't mean you want to take it immediately just because it comes up, because you want to take higher probability trades. A good example for a higher probability trade is simply the other one prior, because you were coming from a huge dump already. You get an engulfment, which is a good first sign for price actually trying to change its mind and its direction. You get the 1 versus 2 setup with that candle, but you probably also gotten the exit and the entry and the exit already. For that, I like to zoom in usually if I cannot know, because it could have happened that the exit happened before the entry, and that is not a valid order. You need the entry to happen first and then the exit. Makes sense, right? Because how can you have a trade if you don't have an entry before you exit? So if I put the fib like this on the candle, same principle, take the lower wick, take it to the upper body, and then I use the arrow keys on the keyboard and move it to the right, because at this moment in time, that's the earliest moment where the entry and the exit can happen, because the trade is only created when both of these candles are fully closed, and that's the condition set to create the trade. So logically, the trade can only happen in that candle. But just by looking at the candle right now, I cannot know if the entry was hit and then the exit, or if only the exit was hit and then the entry. So what I do then is move the fib to that candle that can do it, or the first candle that can do it, and then I just move zoom into a lower time frame, and then you immediately get the answer that indeed, because that's where this candle starts, this 1 hour candle, then you can already see entry was hit here. Yeah, it gone a bit lower, but doesn't matter, and then hit the exit. So so yeah, given the whole price structure that was around, that was a decent trade, because if I look to the left, I can already see we have a support range here and a bigger support range here. It was not super likely that it will, after this dump, it will just immediately engulf one candle and then just dump immediately. Can happen for sure, but it was also a worthy scalp, and not every scalp has to be like all your folio, you know. You can also accumulate a lot of tiny gains with tinier scalps. So if you're like not ready, not sure going into this setup. Oh no, it was this one, sorry. So that's when it happens, because it's easy in hindsight, obviously, to say, yeah, that was a valid trade. So it makes sense to use the replay tool and see what you got at the moment in time as things happen, and you have to make the decision right. So coming off of this setup, if you just put normal break levels, support, and whatever here, seeing this engulfment closure right above the support levels from the left, after dumping already very speedy, you already know that price is trying. Jay, I don't understand you if you're trying to talk.
A 7 or 8 mil is a fucking low. 7 or 8 mil? No. Or is it
Okay.
They are like, they're gauge, not mil. Gauge.
Okay, I mute you again, Jay. Sorry. Now, if you wanna say something, just please let me know in chat. Yeah. What was I about to say? So if you come off the setup, when you see this engulfment in the 1 hour, and for me personally, I like to use RSI. I would have seen it super oversold. Probably also on the 15-minute. To me, this is a valid scalp. Does it mean I will take put the family farm onto that single scalp just in case it then fakes out and just goes through anyways? No, you can also do like more cautious scalps in case of uncertainty, but definitely was a valid scalp. And as you've seen, it has played out in even a few minutes because it was in favor of the whole market or price structure around it to play out. And the other one I showed you before was not in favor. This one here, because price already made up its mind that it wants to establish a bit of support here. You already had that long scalp here. It breaks out of this tiny range, and then if you would have tried to short this one, yeah, the chances were just not in your favor of getting out ahead with this one. But that's also where like exercising a lot, zooming into the different time frames, really comes to fruition. I mean, you will probably find examples where this one would have played out somewhere else under different price market structure around it. So I'm not at all claiming here that I knew that this pump was coming. No way. So yeah, I hope that clears it up a bit. JX Rock. Yes, it did. Does it 1v1 or 1v3 have any other significant further? No, the entry and exit remains the same. The 1 versus 3, 1 versus 2 is just a different kind of backtesting for the chances of how trades play out timely. And that's also what the BUBS bot that charges fairness programming for a lot of for many months, and it's putting all those cool trade signals into the channel. Yeah, that's what the bot is mostly focusing on. Just with much more fine tuning would be, yeah, too simplistic to just code it like that and then that's all it is. No, there's more to this. How this bot feeds the trade into the chat, but yeah, it has a huge angle to the 1 versus 1 plus 1 are they? Is what they are called. 1 versus 3 doesn't really have any relevance, not as far as I know. I mean, it's just an improved version of 1 versus 2, if you want so. So I'm personally not aware of statistics or benefits from looking at 1 versus 3s. And if you have like a 1 versus 3 like here, you also already have like a more stronger trend change. So that's also when you want to start consider different things. But anyways, I really recommend the second last session. I can post the link in chat to the collection of all the sessions, or maybe from the event channel it's a bit more obvious. Where is it? Here, this one, yeah. So this post is where I summarized what we've dealt with in that live session, and that mostly covers a lot of the basics. But don't hold back. If you have more questions, keep shooting. Just in case you didn't watch it, I can really recommend it because it catches up to a lot of those basics. And I mean, we can also chat about it all day, every day in the public chats, or use the session right now to ask follow-up questions in regards. Okay. Mike was asking how much of an influence do the SolUSD ops live feed have when deciding where to put your entry? I definitely watch them every now and then, but since I'm watching the charts when I'm trading myself on all of those time frames anyways, and it doesn't contain all time frames because the bot looks really at every minute time frame, 4 minutes, 6, 7, 8, 9, 12, 144, and so on and so forth. But if I have like a desire to get a bit more answers, then I'm more likely to look into the live feed. But that's also probably because I already am so used to doing all this that I'm less dependent on this, what the bot constantly says, to get ideas where trades are, because I can already see, depending on how the candles form and how the wicks are and etc., that there are probably more trades within, and then I just zoom in on demand when I have that desire, because I mean there are trades everywhere all day every day, so you won't catch them all anyways unless you have a bot. But if you want a bit more confluence and you look into the bot feeds and it's telling you that there are multiple longs formed around the same price point, then you will probably also get that conviction to take the trade that you have probably already spotted yourself. Or if you are completely lost on the chart and you want a bit of guidance and a bit of help and heads up, then that's probably also worth a lot to check the bot feeds and see if you can find a pattern there that would help you, to give you a hand to find a price point that's interesting, or even a single trade that you might have overlooked. So it actually really depends on how you use it. I mean, the bot does the live feed. So we have two things. The BubSpot is that thing that charges fairness programming, what is actually actively taking those trades that it is signaling. He's forecasting the trades that they are coming, and if they hit in a timely fashion, then the bot will also take them and act accordingly to entry and exit and also stop loss. And then we have another feed which just pushes all existing trades non-stop on all time frames. So if you would scroll through those, then you might be able to get a certain degree of conviction for whatever use case you are currently having for yourself. Because I cannot give you a blueprint for all your situation, because yours is different than mine, and mine is different than the other guys, and so on and so forth. But there are like multiple ways to leverage what the bot feed is actually telling. If that makes sense to you. Otherwise, please post a follow-up question. Okay. Yeah, the chat, I just do it manually. I mean, my charts are already, you can see I use 3 panels on one single feed just to get rid of the noise while I'm talking. I don't need more lines on my chart actually. If I could, I would take less lines. So I don't seek out more automation. I mean, I have more indicators that I use all day, every day. And if I activate it now, then eventually it just gets like abstract art if you don't know what you're looking at. And it gets also a bit exhausting if you keep adding more shit, and would also cause more decision making fatigue more than anything. So yeah, if I had to give an idea, my personal approach is have as much needed to get you a good framework, but have as less as possible on the chart. So I guess that's what I'm trying to achieve every day until I find myself in 100 lines, and then I have a huge mess, and then I clean it up. So yeah, no, it's not drawing it automatically. I just do it manually. What is this? I just take the candle here that's engulfed, go to the wick, to the body, and then that's it. But I use the magnet tool all day, every day. It's definitely much easier than without, because then you would be like, okay, I can't hit the body. So yeah, I just use the magnet tool and then go nearby that candle. Then it snaps automatically. You can see if I go too far away, then the cursor goes here. But if I go only nearby, then it snaps right to the wick. And it always snaps to the closest anchor it can find. So you can see when I go to the middle of the wick and just go slightly below, that's the wick. And if I go slightly above, then it all immediately snaps to the body. So it's already enough if I'm just in this column of this candle where the candle is printed in, and just go nearby and then click somewhere in the body top. Don't even have to be precise, because I already know it will snap it to the right body part. And it's, for me, the quickest workflow so far. Rear window is asking about the TTP PNR indicator, I guess. Yeah, I can talk about it a bit. So get a clean chart again. So what is it? The PNR indicator. Oh, no, I would have to redo the settings. So I can use my main chart and remove all the drawings. And then put it on top. Check it in. So TTP, first of all, is a YouTuber, the trading parrot, has a channel. I like this guy a lot because he's highly analytical. Looks from a lot of angles and also looks from a lot of angles that I don't observe myself. So I get a lot of good input there for general data behind the charts. Saves also a lot of time if you don't have to dig into those things yourself. Same as like Camel Finance. I don't like his charting, but I like his macro analytics. He does a lot of work to analyze macro data, so that saves again a lot of time for myself, and I can just watch his summary and I can use my time more efficiently. So that's the same idea. And he also built some indicators such as this TTP PNR filter. PNR is not a concept he invented. It's something that's mathematical and highly related to charting and price expansion and price contraction. The exact formula, I'm sorry, I can't give it to you now. You can basically Google it, but it does basically calculate based on the history of the X last candles, and depending on how the price deviated a certain degree of percentages into the last calculated band, starts to rearrange the band of that prior calculation depending on how price travels up. So how I use it basically and how it's meant to use took me a while to find out how I can use it for shorting because the default setup only gives you long signals on the time frames that you are scrolling through. And yeah, eventually I figured out how I can also add the indicator a second time and play with the settings until I found a reasonable signaling that had a good track record of being meaningful, to have it then just twice, once for buy signals and one for sell signals. And they're actually pretty good on the 4 hour, depending on what other things you're looking at, because you obviously get also failures. This is a good example. I mean, if you would have bought this buy signal here after it checked in, it immediately dumped after. Then you get 2 more buys and eventually you would have traveled above your entry. Okay. But yeah, as much as every indicator goes, it's just a probabilities game. Same as those cells here. I mean, it's a huge warning if you get so many 4-hour sell signals. It's even worse the higher you go. And 4 hour doesn't sound like a large time frame, but for the PNR indicator, it's actually already a relatively high time frame if you're talking about swings. Quicker trades are coming on the 15-minute. You can actually see it very well here, how good it is at times, and at other times, yeah, you wouldn't have performed that well. So I like to use it to get more confluence about the bigger market structure rather than trading on it blindly. So also when we were running into that Bitcoin top, if you get an 8-hour sell signal, you can already see how good it is actually there. You have a buy signal here, you run immediately to all-time high or almost immediately. You get one sell signal, you have them all crowded all over the place here. And I guess the last one was in the 70s, the last buy signal, if I'm not mistaken, right at the bottom again. So it's pretty good to get another level of conviction for the things that you're already looking at. I mean, it was not a secret that we were overbought here. I was very vocal about this situation. I was very vocal about this situation. And yeah, also longing this area here was not a secret. Could have dumped more, sure, but from a probability standpoint, for many reasons, if you're not always trying to lock in one trade that you can sit on for weeks and months, but you're actually looking at high probability setups, then or you're seeking out high probability setups, then this is a good indicator for you to get extra confluence at very large price deviations from tops to bottoms. Because if you would have taken this long here, there was a long, obviously there was a dead cat bounce into that resistance to the left, and also all the trend lines that were also coming across here. If I turn those on again, it obviously failed at even the interior downtrend already here, and was just taking late shorts after all. That was a scalp from here to here, or anywhere in the middle and anywhere in the middle of the top, whatever. I don't claim I hit every wick bottom and wick top. That would be just not true. But you also haven't had a 4-hour buy signal here. So if you were seeking out more conviction, if there's a good trade here for a larger play that could eventually take place, then you would have at least waited until here. And if you've then had gotten the confluence to take along here, then at least you would have gotten out sooner rather than later. You wouldn't have had to wait very long, and you even got 2 more buy signals here. Same is actually for the sell signals. I mean, if you don't panic every time or over leverage yourself, as soon as this flashes, then locks in on closure, because the signal only remains when the candle closes. Then the signal remains. It can happen while the candle is jiggling, but then it can also disappear, appear again, disappear, appear again, and then when the candle closes, that's when the signal stays. And if you would have shorted here, then price obviously also went like, I don't know, 5% higher. Yeah. So if you're not like super decent short, just reasonably shorting at this, then price travels higher. Maybe you gave yourself some room for a cushion to double down, to layer in, and not to blast all your money at the first signal. Then you would have actually gotten an extremely good entry for the clown fiesta that was to follow, right? So yeah, definitely very valuable for larger market structure. The 1 hour, I like it sometimes not. It's better when the price is in a same as the 15-minute. Actually, the 15-minute and 1 hour are to me better either for real scalping, or if the price is in a decisive trending situation, like when we were probably in this area here. You can check on it. 8th of April. It's August. So if the chart or price is in a more decisive trend, in this uptrend, then you actually get very good entries to add either into your long. Let's say you were already long from down here, and for whatever reason you had an informed decision that we are remaining in a strong uptrend, then those signals are extremely good to add to your winning position. So if you had, let's say, $10,000 long here, and then you just let the market move, you're not hanging on the charts and trying to min-max every $100 of your trade. You have your conviction down, you have your money down, you have your long down, and you just want to let the chart run and let your winner run, but you're actually trying to increase your exposure based on the gains you already have, so adding to a winner, which we will also talk later about during the risk management section. Then this would be a very good example of where you would want to add. And as you can see, it's self-fulfilling again here. And maybe you had reasons later to exit or to hold on. But it should then also be in confluence with other things, because then you can see if you would have doubled down on every single following signal, that depending on how much you blow into those signals, that could be also like doubling down like a lot, and it would have worked, yeah, whatever. The price ran higher and higher, but eventually the trend will turn, and it's where you want to have a better understanding of the whole thing that's going on and not just blindly trade those signals as they come, because as you can see, if you just zoom out a bit and look at the 1 hour, it's on itself not a good signaling, just maybe for a scalp here, and then it pumps up, and then okay, I just exit even without a signal for other reasons because it's running into resistance. Or same as here, you get those signals here, and that's also where the 4-hour signals were. That's probably very nice confluence for you to take the chance. Also guessing on that they won't rip below that wick immediately, because that's obviously also support, even if it was a cascading liquidation event. Someone bought the last time here at this price point, and that's definitely also support. Then it revisits it. And if you got that confluence here from multiple signals from this specific indicator, and it helps to you to make an informed decision that this is a good long, then that would also just increase your probabilities. That you are probably getting it right. And then you also had your sell signal here on the 1 hour at that incident, so that was not too bad. So as I say, that thing alone, I don't trade it, but I like to observe it, especially for the 4-hour time frame. And one I'm actually at the moment a bit ogling with is the daily, because we haven't had a daily buy signal on Bitcoin for a very long time. It was also the perfect low if you get daily buy signals or sell signals. Except this single instance here, you can see how crazy good they work. And if you have all the patience, because there were not a single signal in all this 8 months fuckery to the right last year, which was super exhausting, up and down, never making any decision, accumulating forever or consolidating. But if you had that patience on the daily time frame, then you would have also gotten one of or two of the yeah, basically two best entries that the whole range has ever given you. Then same here. And so that's why I'm pretty excited at the moment to tell you. I mean, as always, the chart is on the edge of a cliff, and maybe it's a bear market soon and we're all going to die or not. That's not us to decide. That's what other people will decide. We can just analyze it and make informed decisions. But nonetheless, if I hold my cursor here over that indicator, then it will tell me the numbers of when a short signal and a long signal will fire next time. As you can see, if I move over the bands, the numbers change because the bands have changed. But if I go to the very right, it will tell me the last two values. So let me go here. So the upper one is for long signals and the lower one is for short signals. And the condition to fire a signal is only met when, so for long, you need a closure below the price that is shown to you. So 103.9993, so basically 104,000. We need a daily candle closure below that. And then again, a daily closure above that price. That's very important because as price is trending in one direction, that's also when the bands will over time eventually change. As you can see, they are most of the time very flat until that, yeah, I would have to look it up myself how it is calculated perfectly, but basically until that percentile nearest rank formula is calculated, eventually those bands will change as price deviates from those locked in bands until the moment, and it will more likely or is more likely to change faster when the price keeps going into the direction you are trying to trade, aka if you're hitting the long just because Bitcoin hits 104K, yes, it may work, but if you are looking to have a signal on the daily time frame, then you need to wait for the condition that the daily candle closes below the band and then back above, because that's the only moment when the signal will fire. So if Bitcoin goes down here, let's say 103,000, then you don't have a signal, even if it then goes up back a bit, goes back up a bit, and then it just keeps falling and falling and falling. And then you would have taken a long even without a signal firing, because there was no daily candle closure back above 104K after it closed below 104K. And if price was to fall like this, then also those bands will slowly start to travel down a bit and travel down and travel down. Let's pretend it's everything goes really bad, just for the sake of the example. So it goes here, I don't know, and the price actually remains under here, then you never get the signal, right? Because the candle never closes above the band, and then eventually, bloop, the candle closes here, and that's when the daily signal would fire. And that's also only then the valid condition. So if you would have taken preemptively the long just because Bitcoin hits 104,000, then you are not respecting how that indicator actually works, if that makes sense to you. Yeah, I can share my settings. Yeah, good point, Niels. So I guess the long settings are default, and the short settings, yeah, I had to play around for a while until I found a meaningful, yeah, settings setup that would get signaling right, quote unquote, yeah, to a degree that it makes sense just by looking at all the signals that it's firing and how reliable they were, etc. So yeah, it's not TTP didn't talk about shorting with this indicator a whole lot. I know about that indicator for like, I don't know, 2 years or so, and eventually I figured out the short side for it. So yeah. Any further questions about the PNR? Oh yeah, I can show you. Oops. How to add. I mean, it's actually as obvious as it could be. You add it once, and then. Ah, yeah. By the way, this is the indicator. If you don't find it. Then you add it a second time. It will make you 2 panels. But if you hover over one of either or, doesn't matter which one. So if I take the lower one and go to the 3 dots, more menu, directly at the indicator, then you can actually click here to move to, and then it will offer you to move that indicator to the existing pane above, and then bloop, it becomes one panel, and then you can change the settings in whatever order you like. You can have your short settings here or here, and then inverse on the other from the settings I've just shared. So yeah, that's how you can have like the same stuff multiple times in one panel. Yeah, no worries. You're welcome. Yeah, Monty Trader, it's a trading parrot. So I mean, I've digged a lot through YouTube over the last years. I mean, eventually I also started out myself, obviously. Otherwise, I wouldn't have found Investor Answers back then, who gets a lot of credit for, yeah, how important digging into things is and other things, patience, buying the right assets rather than trying to spread all your money across 30 assets, etc. So helped a lot to get out of the baby shoes many years ago. But obviously I also tried to keep digging throughout YouTube because there's so much crap, and my blog list is probably huge. But over the years, those people that are still some that I watch on a regular basis, and I can definitely recommend depending on the content you're seeking out, is so a relatively new one is the Trading Parrot indeed, but he got also so much better, and his analytical set expanded a lot that I like watching all those angles for myself. So the Trading Parrot came with finance, really only for macro, if you ask me, only for macro analytics, not trading ideas. Very poor for the trading shit he's talking about. It's all the cycles and so. Yeah, then Crown Cave is, I guess, the YouTube channel name, but his name is just Crown. So he's huge into statistics, and I like those for myself to have those in mind, because there were like a bunch of signals fired on Bitcoin where certain moving averages On the 3-day, 4-day, and 5-day, we're crossing in a bearish way, and he gives a summary every week and then every month. Then sometimes when there's something critical, every day or when it happens on a day. So he has like all the statistics from all the chart and from all the things that happen and their probabilities. So he's not predicting, but he's analyzing and giving you statistics about the simple facts that has happened throughout all the Bitcoin history. And for example, the 3-day, 4-day, and 5-day moving averages crossover. I don't think it's the one I'm showing you, but just let's pretend it is. So what he's basically doing, he has the reads on the things that if such crossover happens, like a bearish crossover, and that was for the 3, 4, and 5-day time frame, specifically very lately, then there was a 100% chance historically that the price of Bitcoin will visit another moving average to the lower end, which it did. For example, here, that wick here completed like 2 of those conditions, and those conditions were locked in somewhere around here. So if you know those statistics and you're a fan of numbers and statistics, then you would probably be less inclined to long this, even if you see an engulfment here. And that's where things get more critical and confusing when you start out, probably, because this is a long, right? It hit the entry and could never reach its exit yet until date. Eventually it will get there, because I'm not that bearish. I don't think the bear market is here personally. But if you would have taken that long against your against all odds, because that was not a good setup on itself, but let's pretend you did it. Yeah, then you would also have all those statistics against you that we're saying when those certain crossovers that Crown is reading a lot, sharing a lot, and have all the stats for, with the probabilities that crossovers that were happening here, that they share a conditioning to actually go here with 100% success rate over time, eventually, that you wouldn't probably have taken along anyways here. I mean, I guess most of you guys didn't take long because most people were shitting the bed after this historic crash, and I was also absolutely shocked of what's possible. So I don't think that any of you were really looking too long, and were mostly waiting in this time how things play out, and rightfully so, because it went lower. But maybe you had the courage and it formed a decision to take a short here, and knowing those statistics would have also improved your probabilities of making the money on the short side there, given all you have known when you are into those statistics. So that was a long rant, but I'm a follower for many years. I don't watch him every day, but sometimes, especially the monthly statistics, are very interesting, the weeklies, and sometimes when there are like critical changes in market structure, and then he gives you a very big summary of the whole history chart about it. That's super invaluable, also, to just take the work from somebody else and then get that knowledge, because why not? So Crown Cave, let me write it down in chat quickly. Crown Cave reads a lot of statistics, general trading. Yes, and the fourth guy, it's a bit more low hanging, but I know he's very successful. But he keeps also a lot of stuff for himself and doesn't share a whole lot, because he obviously is also building a business, and he wants people to get attracted and come and join his private group, which is nothing bad. I'm not judging. Just saying that watching his videos is of least favor because they're not like super deep or super technical. But if you're just starting out and you want to get a better understanding of how price structure or market structure could be evaluated, then that's actually somebody I would recommend you first, because it is a more low-hanging fruit on the technical level of what you need to bring to the table to understand what he's talking about. So that, as I say, always depends on your desires, your own goals, your own skill set, and then whatever you actually currently striving for or thriving for, then this could make a lot of sense. But the important part is that he doesn't talk like shit. He's not talking crap, and that's a big filter everybody I'm listening or ever watched throughout the years has to pass. And if there's bullshit, then it's a block, and I will never watch that person again. And period. So, and those four made it in the last 4 years. And that's not a whole lot, because I've probably seen multiple hundred of people with their takes and ideas, and most of them have absolutely no clue. So that's, yeah, the name is a bit cheap, but it is what it is. It doesn't change how good that guy is actually. My crypto general TA. So yeah, I posted them just in chat. I will also probably provide it later in the summary of today's live session again with all the links to their channels. I think credit where credit is due. I mean, we're also building something here, but I think it's fair to respect other people's work and, yeah, take them for what they are, because they know what they are talking about. What targets do I have on Sui? I don't have any specific targets, JG1. I'm sorry. It really depends on the whole thing, what the market's planning to do. I mean, I shared a chart earlier in the alts channel that Sui is decently accumulating above his golden pocket, and that's a good thing to have. It's worse if you are just hanging around below. So the golden pocket is generally, if you're respecting the high sorry, the high and low of the whole chart, that the best entries start at the golden pocket for large swings and go as deep as to the 0.786 fib level. I even have a dedicated setting for the golden pocket thing that you've just seen. I can also share that, so I don't have to reconfigure it every time. So you draw it from the top to the bottom of any range. In this case, I want the macro perspective on Sui. So that's basically the highest high and the lowest low. But if you are just trading a range, you can use it also for scalping and everyday trading. Basically, just this range here is also valid. If you take this high and this low, then you would probably get the 0.78 level. Yeah, and that's exactly where price is just hovering. And that's also where you can see where huge reversals can start. So Fibonacci levels are important in many ways. And price is just deciding. I mean, it's not a secret that everything is somehow on the edge of a cliff, deciding if it wants to die or not. But that's also usually where the best entries are. So if you are brave enough or have an idea why longing is still a good idea, then this is your entry, you know. It's on this fib level of the intermediate range, and it's even in the golden pocket of the whole fucking chart. So, and it's not like that I have a secret here. That's also where like bigger guys with bigger money place their buy orders, and plan their next move around. And that's also why price cannot just easily fall through these levels. Yeah, it's a very easy measurement, and also where algorithms will buy the shit out of this until either side will win. So it can fuck around here for longer, and if we get that alt season or that bigger upswing or whatever, then it can moon, and then that was in hindsight again your best entry for many reasons. But if it cannot hold those levels, then you will also probably see a lot of quicker capital unwind into those lower levels, whatever support that then is here coming from the left. Again, take this break level as the actual low. Yeah, it is what it is. With higher risk comes the highest return, and those are your levels of interest for many reasons. And if price reverts here, then it can perfectly do so without any questions. And my target, yeah, I mean, it depends on what you try to achieve. Are you scalping? Then it could be anything. Nearby resistance. Are you looking for a swing position? Then you could just check on everything that's here with all the resistances that are like obvious, also coming from here. So pick your poison, if you are more bullish, then you would probably hold at least into this range here. Do I have a break level here on the daily? No, but nonetheless acts very well. Maybe it's probably something older from here. Chip, 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 chip. I guess this one is fair. So that's also where you get a lot of reactions around. So if you are only semi-bullish, but you see upside potential, you would probably take out a bigger chunk here. If you're a little bit more shy, you would latest take it at the resistance from those supports for the potential support resistance flip, because if price goes here, it has a huge chance at least to get a bit higher to take all the stop losses above this wick. But then also a decent chance to just make the support resistance flip at that exact level. So you would probably partial TP something here, then here, then here, and then yeah, it's for you to decide if you're that bullish that we get to new all-time highs or escape 7 months, 6 months old range of highs. I mean, if we get here and it's not driven by some whatever news, SUI gets adopted by ChatGPT, blah, 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 whatever nonsense that would pump a chart on its own that high. If it's honest alt season and market structure change and huge trend change shift, and you get those breakouts here, then that's not very far to new all-time highs in price discovery. So yeah, that's this moment here would be latest decision-making time, if you ask me, how much TP you want to make, and then maybe let the rest run. Thanks for the kind word, Big Tree, Small X. Always a pleasure to have you around. So, if there are no other immediate questions, I would still like to go to the risk management topic, because it also takes a bit of time. It's not trivial. It's probably one of the most underrated topics, but also one of the most important topics. And we should definitely, maybe for some it is a bit late, given the historic market crash, but it was also a specific request by a community member, and yeah, I worked a bit upfront about it and made myself some notes what I want to talk about actually in that regard. So it's a bit bigger. So I would say I wait 1 or 2 more minutes for other questions, but if nothing comes around, then I would go over to that other topic. Okay, very well then. So risk management, as I said, highly underrated. Let's get to an empty space on the chart just for the purpose of being able to draw. Yeah, the windows there are annoying, so whatever, just need an empty space. I guess we need to talk about risk management because I read a lot about gains management and how much leverage should I use and how much YOLO are we today, but I don't read a lot about, hey, how can I manage my risk properly, or what do you think about stop losses and so on. So I guess would be worth it to talk a bit about those basics, especially after what has happened, and if you survived it or if you have taken a big hit but you are not permanently harmed, then congratulations, you are amongst very few people that can tell that about themselves, because as you probably have read that, maybe it was all over crypto Twitter, I guess, and a lot of stuff was shared, that there were like super knowledgeable traders and high net worth individuals and all those experts that were flexing about all their millions throughout the years, and they were wiped out in 20 minutes, if not 30 minutes or 60 minutes of market action, and they lost all of their money, or at least so much that they are broke enough and sad enough. There were people committing suicide because it was actually so bad for them, and that personally I gotta say that impressed me also a lot in the days after reading those stories, because that added just some extra shock to the market shock that I was already presented. So was not a great few days. I don't know if guys from you or any of you are still suffering from the aftermath. Maybe you lost some money and you're hating yourself now, or you hate the market, or you hate Trump, or whatever. Don't feel bad if you're still around. If you survive this for the most part, or at least with most of your money, then that's already a huge victory, because you did at least something right, which means you didn't keep adding and doubling down into the crash, or had limit orders that are beyond your margin, beyond your capital, which is basically the reason why all those high expert traders and crypto Twitter basically as a whole got blown out by the millions and billions, not only in nominal value of the numbers we know. I guess real numbers are a bit higher, to be honest, and not everything was reported. but also by actual user count. Even the number that we know is that there were at least like 2.2 million traders wiped out in a single candle, and that's a number. That's definitely a historic crash. So let's talk about risk management. Let's write it down here. Risk management. I will only write some bullet points that we have it there on a video, and there's an overview, but I won't write everything down. And we'll try to just talk freely about it for the most part. So the first rule of all is really, and it's not, just a side note, it is really that number one rule above anything, and any further decision should only be made with that in mind, is capital preservation. Why is capital preservation so important? It could be obvious just by reading it, but internalizing it and taking it over to your active trading decisions is what makes the difference. And capital preservation is basically the idea of not only risking what you can afford to lose. You probably heard that a lot or many times. Also being strict about it. Because if you can preserve your capital, that gives you the opportunity to come back to the markets every time. If you don't have any capital, you cannot take any trades. You can take a lot of risk and you can take a lot of wins, but if you blow everything out on a, for example, historic crash, for whatever reason, how you managed your trades or your positioning, then you maybe would have won 100 times before, and then you lost one time, and then you have absolutely no capital anymore that was preserved to come back, to keep going. Because victory doesn't mean that you're always winning. Victory already means that you are not losing. That's a very highly underrated point that not many people talk about, or not talk about a lot at least, that you don't always need to make killer gains. You don't always need to scalp every move, but not losing money is actually already a big win in in that lion cage of ruthlessness and recklessness, that being the market, and the market is never wrong. If you lose money, your opinion doesn't matter. Your insights or informed decision doesn't matter, because the market will prove you wrong by taking your money. And if you're not trying to preserve your capital, that will keep you in the game to take the next opportunity that may come up, then you are out. And many people lived through that almost 2 weeks ago. They didn't preserve their capital by any risk management, and now they are out. So victory is being made through preserving your capital and being able to come back consistently, and to forge that discipline to eat losses on a regular basis, depending on how your trade got invalidated or not, or how your thesis got invalidated, and to limit your loss on your capital that you try to preserve. So another frame of reference to describe it probably is trading is, some people say it's gambling, some people say it's maybe informed gambling or whatever, but however you call it, you can make money with it. And if you treat it as a profession and as a business, then what is the first rule of every business? The first rule of every business is you need to stay afloat to stay in business, because if you don't stay in business, then you don't have a business, and then you are broke, and then you have nothing to build up on to accelerate back up. So if you had like, I don't know, 100 grand and you lost 10 grand on that huge dump 2 weeks ago, that hurts. 10% cut from your capital hurts a lot. I don't pretend that it doesn't hurt. But you actually also manage to preserve at least 90% of your capital, and you can keep going, and you can make that money back, and maybe in many tiny wins, maybe in a big win or whatever. But yeah, there are more different layers to it, and more different angles. Everybody has to find out for themselves a bit more how you will work with stop losses, how you want to work with position sizing, and so on. And we can talk about those topics also a lot for many hours. But I think that's also where a lot of exercising comes at play. And the general rule of thumb is only risk 1% of the money you got. So if you have $10,000, then you would probably, for any trade, at best only try to risk $100 for the reward that you are trying to take to the upside, or if you're shorting, then to the downside. That's a general rule of thumb. I'm not trying to pretend that I'm doing that every time. It definitely depends on the opportunity also. But that's the general rule of thumb. If you want a number, then try to work yourself around that, because if you work with 1% risk of your money stack, then you can be wrong 10 times until you even lose 10% of that whole money stack. But it is enough to be right one time to take that 10% back, because if you would have longed, I don't know, Solana at that 178 yesterday when it was shared at the support, and you would have risked, I don't know, by that leverage, by whatever leverage you try to play with, that $100, maybe you wouldn't have gotten the entry right 1 or 2 times before, just being close to it. But if you have taken it on the, I don't know, 3rd time, then you may have nailed the entry, and then you would have gotten all the swing back up, accelerated by your leverage, and then you may have eaten 2 times 1%, but now you were right because your idea was right, your trade was right. It was maybe just too early, but you preserved your risk. You preserved your capital by managing your risk for that trade idea. And eventually it got rewarded because your analytics were right, the idea was right. It was maybe just a bit early, maybe a bit too greedy, or whatever the reason was you were taking the loss. But yeah, I don't know. I hope it makes sense from what point I'm trying to come from here. So there are obviously more nuances to it and more layers and details, but the general idea is if you have money you can keep going with, then you also have the actual resources to come back to the markets, compared to all the other guys that were wiped in the millions. They cannot come back and cannot take all the opportunities that will come. So I guess another important bullet point is to talk about courage. It's a double-sided word, or double-sided sword in one word. Courage is not to be like trying to take risky trades all the time, or trying to be in every opportunity all day, every day. But the real courage comes from patience, because that's also where the biggest opportunities are. Either waiting for an entry as much as letting your trade play out. Because if you give your trade room to breathe, you had a good trading idea, maybe you took a very nice entry, but you are then hanging on the 3-minute chart and trying to figure out every time, is that the right move forever, and how long can I hold it, and yada, yada, yada. Then that's probably also in parts a problem of position sizing or over leveraging. And that's your way of showing courage rather than sizing things down using no leverage at all and give your trade room to breathe, because market swings can at times be super boring, super annoying, super tricky. There will be tweets, it goes up, there will be tweets, it goes down, there will be no tweets, it pumps anyways, there will be no tweets, it dumps anyways. And if you get lost in all those little jiggles while you're trying to take a swing position, then you're probably overexposed in some form or the other, and you're not taking the actual courage, which is to be patient for the opportunity that will come, being the right entry, and the courage it needs to be patient to let your trade play out, if that makes sense to you. So yeah, I guess I add here courage, patience, for entries, and letting trades play out. Courage doesn't mean taking every trade. It's a long bullet point, but I guess if I write only courage, then it's not very meaningful. But I can sum it up as this. Yeah. Furthermore, I like that point. I wrote it down myself because I grabbed it from an audiobook I heard, and I like that a lot. A loss is not an opinion, it's a fact. Because the amateur argues with the markets, trying to tell the market is wrong, and the professional is just managing his capital and his risk instead. So I guess those things go hand in hand. Back to what I said about capital preservation, about position sizing or over leveraging. In either or one of the three things, there was probably an error, or be it the wrong entry or whatever, and then not pulling the trigger to eat the loss quick when your entry idea or thesis was invalidated. But usually in one of the 3 or 4 things is where the problem is, and then people are trying to argue with the chart. I mean, I find myself also in these obvious manipulative shit tweets that Trump is providing almost on a daily basis now. It's super annoying to trade, but in the end, the market will go into the direction that it is intending anyways. Doesn't matter what Trump tweets on a daily basis. He adds to that noise, and meanwhile, all those algos are perfectly playing on this to shake people out of their positions, no matter if it's short or long. But eventually, the market will find that direction. It may take longer, but it will be not tweet related. The market doesn't give a fuck about Trump tweeting about Xi Jinping every day now. They just use it to create the noise that will shake you out of that position. So if you try to argue with the chart based on your wrong entry that the market is wrong, that's not true. The market is basically always right, because that's the total sum of all market participant opinions and all their force and all their capital that is telling you that at this exact moment in time, the current price shown you on the ticker is that what's the right price is, to all market participants agreeing to that exact price at this moment in time. Otherwise, it would be another price. So how can a market be wrong? So yeah, long-winded rambling here. Write it down as loss is not an opinion. It's a fact. Yeah, and then it addresses also as a subtopic maybe you have read that somewhere also, but ego is like the killer to gains. Ego is like a luxury. A professional trader treating this as a business and as a profession. Uh, there's no room for ego. They are not aiming to afford ego. The job of making money in a market is not to be right all the time, but to make a lot of money in the moments when you are right and make losses as small as possible to stay in business, basically. So yeah, I write that also down here. Ego is a non-affordable luxury, basically. And okay, now it gets a bit too long. Can I zoom out here? Whoop. Yeah, that does well enough. Whoop. Okay. So yeah, then a more complex topic that has also more layers to it for myself. Usually it's not a good habit to keep adding to losing positions. Um, and to me, it depends a bit on how you are structuring your trades, because I'm certainly a fan of layering into positions. We talked about that in another live session. I can really recommend it, and can also share it later where we talked about it. So if you had that example from that live session, if you are aiming to have a $10,000 size long, but you are not perfectly sure about where we price nail right now for every dollar down or every cents even, then starting with like $2,000, then another 2,000, and then have the lowest addition to that position by 6,000, for example. Also a lot of variations how you can structure this, but the biggest order should at least go to the lowest price point, or when you're shorting to the highest price point. So that could be considered adding to a losing position, but I think what adding to a losing position is really when you're exiting into a price range where your trade is not longer valid, like anyhow, your trade idea. And then you're trying to throw good money after bad money. That's when you are already at your $10,000 position size, and then you keep moving your stop loss, or even if it's a mental stop loss in case you don't want to get wicked out by a nasty 1 minute wick, just for price to then go into the direction anyways. But let's say the price escapes. Let's see if we have just an example here. I have probably many. So let's say, okay, that doomsday wick is not a good example. Yeah, maybe this. So let's say you have this part of the chart in front of you, and eventually price is coming down, and you're planning to layer in at those levels here, maybe at this wick low, and then those down here, or this break level from the left here, while the price is coming down here. So, and eventually all your orders hit, and now you are somewhere in an average position down here, and then it comes further down. Maybe you can sustain that because you want to give your trade a bit more room to breathe. Then it comes back up. You didn't TP anything, and then it runs against you, and that's like the new range down here. yeah, adding here would have worked out, but you don't know that in that moment that it will do that afterwards. So the typical issue that the bullet point I'm trying to address is adding to a losing position would be still holding on to your trade after it went already below. Then you miss to take profits, and then it goes much lower, and then you are like, okay, I throw another 10,000, if not 20,000, onto that trade. So now you are risking 3 times of the capital of what you're usually risking, and then it just doesn't recover, you know. Eventually charts will do that because the bull market is over, and then you're sitting in a long here, and you already 3x your risk here, and then it keeps dying. So yeah, I think it's different than layering into your desired position size, and when a price reverts sooner, then you have a smaller gain, okay, but you then have a winner running, and a winner running is much better than keep adding to a loser. So keep adding to a loser is a no-no. And you eventually need to learn how to actively take a loss and not discipline or condition yourself about stop losses being your liquidation as an yeah, always present anxiety throughout your private life, because you're not like 24/7 at the charts and just chilling and just looking how you're bleeding. You're also managing other aspects of your life, and if your stop loss is liquidation and you only think about doubling down on your liquidation, then eventually you end up in a blowout, or a lot of losses can also stack up in a blowout, because that usually will escalate into, I need to make it all back. Yeah, but the market doesn't have any obligation to give you any money back. And now that you lost a lot of money, then how did you prove to yourself that you can actually make that money back? So, yeah, not keep adding to a loser. Take the L, because that's also where this thing comes to fruition. Ego is a non-affordable luxury. Not taking losses is usually is usually driven by ego to a very huge part, because the human brain doesn't want to be wrong. I myself also don't want to be wrong. Who does really like it? But the market also doesn't care about your feelings. And if you don't learn how to actively make the decision to say, you know what, my trade is down 10%. It's, I don't know how much of my risk I am currently taking in that example, but it's halfway through. But I have the feeling, I have the impression that chart is not behaving the way I would have liked to see it behaving. You know what? I take the L quickly. I just step back or look for another opportunity, another moment. And yes, more often than not the chart will then fly, and you are like, goddamn. Now I took the L for no reason, and I would have made, I don't know, $5,000 or whatever. That will happen, yeah. But if you learn yourself how to be disciplined about taking more losses actively, that's when you actually gain control over the market situations and navigating the market, and especially about rule number 1 being the capital preservation. Because when you take a tiny L, there will be always a new opportunity. I mean, we see the pump today, everything moons somehow. Is that the top, the local top, and it will dump on the next tweet or even without a tweet? We could check on that on the charts, how things are looking. Probably very overbought everywhere. There will be reversals. Is that the final reversal, or will it just consolidate sideways? That's what we could analyze, but you never perfectly know. And so also taking small losses actively will help you to gain control over the actual um, is that the right word in English? Sorry, in controllability, uncontrollability of the markets, that is just doing what it is doing when it decides that it is doing it. So the only option is to take entries and exits, losses and wins. It's the only options, the only 4 options you really have. So also taking that 4th part of all those options, taking else actively instead of waiting for the market to decide for you to dump really hard and then make a sweaty decision about adding to a loser. That is not a conditioning you want to train yourself about. So yeah, not recommended to keep doing. As I said, layering is a different kind of story. But yeah, it's basically if you are in your position with that 10,000 and the price runs against you, you're already in the hole. You already made that loss, and when you're in that hole, you're basically asking for a shovel to dig yourself a deeper hole. And yeah, that's how I visualize it. Can work out sometimes, but on a infinite time horizon, you probably lose out with that approach, and it really only needs one big loss, and then you are out. It can work 50 times, and you condition yourself about that's the perfect strategy because markets eventually go up, but there will be a day when markets won't go up, and that's when you then do that strategy again because you are used to it, and then you will give all your gains back, everything you made in, I don't know, 1 or 2 years, and you give it all back in one trade, and then you're just like, what the fuck, I lost control about all my gains and gave control over to the market. And that's not the position you want to be in. So, yeah. Yeah, inversely to the whole principle is actually then the positive side. So that's not also so that we are not only depressing here all the time. Let your winners run. Also an underestimated thing. That probably also comes again from being overexposed or over-leveraged. That as soon as you see the tiniest profit, you feel like, okay, I need to take profits. Whole different thing if you're scalping. If you are like these cents precision trading, and you're just really going from trend line to next break level, and then from hold to exit of the fib, whole different story. But if you're like, yeah, also thinking about bigger positions that you can let run for longer to take longer swings and bigger swings. That's where the market will work for you. That's where the biggest profits are also on a larger scale. That will also then compound nicely. Then you also need to learn how to let your winners run. It doesn't help if you are working for a week on a very nice entry and you got your entry, you are full in position, you're super happy, but then the price moves $5 up, you see 5% gains, and then you are like, oh shit, how and when do I take profits where, and so on and so forth. So what does help is taking at least tiny partial profits to bring your stop loss below whatever price point you deemed be the invalidation of your trade. So that could have been for Solana the dip of yesterday. If you would have taken into the pump today something off the table just to pay the stop loss below the even prior wick. So let me go to that chart quickly. Then I'm not only talking. Any rubbish? So it's like a textbook example. We shared that entry here when it happened. if you got that entry or anything nearby, even a bit late, then you're obviously in profit. And if you have taken out probably somewhere here, at least a partial TP, then you can perfectly, depending on how much you take out below those wicks, set your stop loss. And yeah, there will be times in the market where you will just get wicked out and then it will run. It can happen. So you probably want it a bit lower even, but nonetheless, if you take something off the table to pay for the risk that is on the table for the trade, while you want to give it a bit room to breathe without risking your own capital, which goes back to capital preservation, then you have that breathing room for your trade. You can give it if you partial TP a bit, and then let the market just jiggle. Because eventually, if there is more upside, eventually a low will be found. And if you keep repeating this, take a bit off and then let the market breathe, because it can go do this here endlessly, fake out to the top, fake out to the bottom, sideways, yeah, breakout, nope, breakdown, nope. And that's all just fuck around with everybody, and will certainly do so. But if you have your stop loss here and let your stop loss work for you and let your winner run because you already have a very nice entry, then there is also a very good chance that it will develop into something very cool that maybe look like that. And if not, if it jiggles around and hits your stop loss, then your trade got also actually invalidated. I mean, there's no shame in taking a bit more off the table just because you want to lock in some profits. Can't go broke taking profits. But it's also good to learn how to let your actual winners ride, because there will be people that are riding their shorts still, that are open from here. They are not caught in the noise of all this. There was huge pump in between, dump again, little pump again, dump again. And they still hold on to their shorts because they let their winners ride. They are not caught by this noise of up and down, because maybe the chart does this. We don't know that yet. And then they were very well rewarded of letting their winners run. Maybe they took partial TPs anywhere. Then they have their stop loss here, or maybe probably here will be the most stop losses at this point. And the chart didn't prove yet that it wants to come back here and break out and take this. So when it doesn't do it, then they will probably be rewarded to let their winners run. And yeah, you need the courage for that patience to also let those winners run when you get a really good entry, and not get nervous every time the chart jiggles a bit. Where do I have the text? I lose the texting. So yeah, I know it's a very favorable expression to say can't go broke taking profits. That's true. If you only take profits and never losses, then for sure. But yeah, it's usually not how it works. Usually many people take a lot of tiny losses and they're very happy. Then they maintain a losing position, then they keep adding to it, and eventually they can't take it anymore. Then they take one big loss, and that loss is 10 times, 50 times, 100 times bigger than all of their tiny gains from before. So it would be actually also crucial to internalize many parts of this and not just one thing. But if you want to learn only one thing, then it's always capital preservation. And that basically is the fundament of everything that comes after. So yeah. Yeah, patience is another bullet point I wanted to talk about. I mean, it's also in here, we talked about it in other subtopics, but patience is really king. Let the trades come to you if you want to take bigger trades or swing trades of some kind and are not only scalping. You can do both with all the framework provided. You can trade between break levels, hold levels, trend lines, range trends, etc. And those tiny gains stack up. But if you're also doing this while waiting for a bigger swing trade in either direction, short or long, then patience is king and is usually rewarded, and it adds or feeds into all the things that have been basically said already. It's part of everything because and I guess that brings me to a very important point that's very underrated. That is, cash is a position. That's also not a lot of talked about. As I watched many chats over the years, most people try to be allocated non-stop all the time, and they don't see the tree for the forest. That if they don't have a lot of cash or no cash at all, then they cannot take any advantage of the opportunities that present themselves, which one of the most historic crashes 2 weeks ago would have definitely been. I mean, I remember the Burning Chimera sniped Sui for, what was it? $1.47, something like that. Oh my God, what an absolute prime entry. Just looking at the chart also at the same time. I mean, doesn't get better than this, right? You're below all support. And if it goes there again, then it's probably bear market. So your risk is almost zero. And if she or he was smart, then probably on the bounce back up took already on 100% gain at least a chunk out, because that's a very quick and very fortunate gain that rarely ever comes in life. And now can maybe even run a completely risk-free position with a cost base of zero. I don't know how Burning Chimera managed that SUI position, but let's assume took enough out that the cost basis of SUI went to zero, then got all that cash and got all that asset for free, and can let it ride forever and ever, because eventually and very probably SUI will find a way higher, like most assets, given the inflation of the dollar and everything. So yeah, but to take back out that cash from that gain gives the chance to take another opportunity that may come up, and that's a very important part. Yeah, so also comes hand in hand with patience is king. But if you have cash, to exercise patience, to then find the opportunities that present themselves, then you can take advantage of those. And then if it turns into a winner, then you can let it run and be patient again about it. So it also addresses another subsequent topic, which is basically mental capacity. Is also a very underrated resource. You don't only have assets, you don't only have patience or cash, you also have like mental capacity. Some people it's too easier on those things, others do not. They are stressed out a lot about their financial situation being in the market with the assets, and rightfully so, because it can obviously be very, very ruthless, bringing things down 70 to 99% in 30 minutes until going back up. But you need the mental capacity to make any judgments with your assets. Is it either Solana, SUI, or cash, or doing nothing? is also a decision. Just doing nothing is definitely the third kind of trade, waiting in either direction. And if you don't have any mental capacity to sustain in the situation that you are being in, is that either fully cash, fully long exposed, short exposed, mixed, or whatever your situation of your total positioning is, if you cannot sustain that with your mental being and the psychology, then it will keep draining from that resource of mental capacity, and then it will eventually lead to very clouded decision making, or even worse, decision making fatigue. Or eventually you will only wait for others to tell you what to do, which is also even worse, because then you completely gave up all control about your own situation, about your own positioning. And yeah, you basically eventually are not able to make any judgments on your own. And I mean, there's nothing wrong about seeking out a different opinion, but that opinion, in best case, and I mean, it's weird because we are doing these live sessions to educate, to help, to give a hand, but it would not be fair of me to not address it, because the best point you can achieve for yourself is not being so dependent on other people's takes on opinions. They should only add to the opinion or question the opinion a bit that you already have made up yourself. So that being said, if you have not the mental capacity to make a decision that can be taking an entry, taking profit, taking a loss, or whatever, if you don't have the mental capacity to do any of those decisions, then you basically give up all the control, and then the market will decide for you what it will do. Maybe you're lucky and it will work out in your favor, or most likely and most of the times it will be not in your favor, and then the situation probably gets even worse. So if you have issues with sleep because you're overexposed or in a bad position, or if you're underexposed, that, mind you not, it also exists. If you're too cash heavy and also sweating about, oh no, I'm missing the next opportunity to increase my stack. I know some people are stressed about this as well. Whatever causes you to, yeah, basically day by day or hour by hour or week by week, I don't know. It's different to anybody or to everyone. Whatever causes you to constantly nibble from that mental capacity, then you're actually eating, or yeah, you're, how you call it, you're sawing on your own chair's legs, or on the branch you're sitting at on the tree. I don't know, whatever you want to call it, because eventually it will just crumble down like a house of cards, because when you cannot take any judgments anymore on your situation, either direction, then there is no option other than letting the market do all this for you. So it's very, very important to find a way for yourself and bring yourself into a positioning, whatever that means, that your mental capacity is not non-stop harmed or under threat. I don't pretend that I'm never stressed or that I'm not ever, I don't know, sleeping a little bit less because I want to watch the markets more when there's a lot of heat with this historic crash. I was like, not sleep because you wanted to look what happened. Super wild times, but it should not be like affect you in a way that you will never take any decision really any moment after, and you're just like frozen for a long period, and out 100 people's opinions, all the tweets, all the YouTube videos from random people you never heard of, but you watch them anyways now because you cannot make any judgments anymore. Yeah, I guess I'm repeating myself, but very, very, very important resource, very underrated, not talked enough about, if you ask me. Yeah. Yeah. I mean, I have another bullet point. I already talked about it, but I write it here anyways. And as I said, it's a bit self-cannibalizing because we're obviously building a community here. We want to grow all together. We want to have a good thing here. But I guess it's a bit of another nuance, and I would personally address more like all the crypto Twitter noise and from like looking for 100 YouTubers that have all an opinion about everything. Which is this bullet point here, don't listen to other people's, I always forget how you write it in English, people's, listen to other people's opinion. So I add, make your own judgments. Yeah, basically. Yeah, and take responsibility for your gains and losses. I guess that's what it comes back down to. So yeah, we're educating here a lot, and I hope provide value to everyone. But in the end, it's really important to take steps into the direction that you are less dependent on listening to other people's opinions. And they should, in best case, only add to your decision making, to your judgment, or go by side, and you can accept that those opinions are there. And it's good for you to know about those, but you are still confident about the fact that you take no trade or a trade or a profit or a loss based on the judgment and the informed decision reasons that made you take that decision. So that's the general direction you should try to get yourself on in the long run. Yeah, set yourself up to for that. Yeah, I have another bullet point here that says like money is made not in the active trading but in the waiting. I guess I covered it already in the other topics a bit. Different story if you're Skyping, perfectly fine. I also like doing it. There is also money in Skyping, but if you are putting down serious money, then the patience goes both ways. Waiting for that entry and then letting that trade actually play out. There's no shame in buying spot and selling spot. You don't need to perp 2x, 3x, 10x, 75x, 250x. You don't need to do that. Probably most people shouldn't even do that. There's no shame in buying spot, selling spot, old fashioned, and then just sleep on your spot holdings and don't care. And if you try to do something like that, then waiting for those really good buys and then waiting for the market to jiggle around until it has decided to nuke higher, hopefully, and then take those profits after a lot of waiting. That's where also the most gains will be made in the end. If we are not talking like Skyping gains and compounding Skyping gains, but like actually putting down huge sums of money for good entry and then a good take profit and layer out strategy. So most money is not made in taking action constantly, but in the waiting. I mean, we already have like patience is king here, and it somehow and somewhat all things are intertwined in parts anyways, but I guess it's not the worst thing to write it down again. So yeah, last key factor, but it was also part of other things, also like the mental capacity is like emotion control. That's a big issue. I mean, I'm in this for a couple of years now, and I still get hung up when I see a Trump tweet, even when I expect that it happens. I mean, I even expected it a couple of hours ago and said, yeah, probably we will get a pump. And just waiting for the tweet, and then it came, and then things nuked higher, and then yeah. But still knowing that it will happen and still expecting it, I'm still annoyed by it. The difference is if you take your emotion to the trading desk and make trading decisions with those emotions, and that's where you need to have the discipline to take the cut. There's no shame or no worries if you're in the public chat and you're super annoyed, pissed, whatever. You want to vent about it, you want to rage about all the shit that's going on. No issues at all. I also do that sometimes and let that play out, whatever. But you should never ever should let your emotions get to the point where you take the trade based on either or. And that goes both ways, taking a late entry because you missed your entry, and then you take an entry that you would actually not like to take, but now there's FOMO, so fear of missing out. That's an emotion. And then you chase the trade, and then it dumps immediately, and then you bought the top, which is a classic. And then you exit, but then it pumps again, and then it's now much higher than your prior entry, and then you're double mad, then you take a new entry, and so on. And somehow you now lost 2-3% of your capital because you let emotions take over, you had no capital preservation framework, you had no courage to be patient, your mental capacity was already seemingly on some limit because otherwise your emotions wouldn't have taken over, and so on and so forth. So all those things go hand in hand. And ego is still a big thing. So no issue at all to be emotional about the markets in some form and express that. Not a big deal. Sometimes funny comments come around with those things, definitely. But you need to have that control for your trade decision making. You're making an active decision for taking a loss, for taking profit, taking an entry or whatever exit. It's the most difficult, but also like the most important thing to master. I'm not gonna lie. Some people are doing easy about it. That's just the nature of how every human is individual and so on. But they have maybe problems with the analytical parts, and that's where other people have a much easier way of navigating the markets. They can analyze it, they get it right, but they fail on their emotions, and other people have their emotions under control, but they have no clue about analytics. And that's probably also where such a great community will come more to fruition, that we get more things right more often together. But nonetheless, for those people that feel caught right now and called out right now, I can only tell you, I know it, I've been there. It sucks, and the only thing you can do is at best, try to size down your positions a bit, get the confidence back, that you feel like your trading system and your takes lead to somewhere, and you're not overexposing yourself with individual positions too much. And in worst case, if you've just taken some losses, then that's even the more riskier moment to then take new trades. Even if that means you miss out an opportunity, there will be a lot of new opportunities in the future. Probably actually infinite more opportunities. But if you're just taking a big loss and then you're immediately going back to the desk, and even if there would be a good entry right now after your loss, the chances are very limited that you will take a good decision because you are so emotionally pumped up and you are more or less just giving away your control to your emotional skill set, quote unquote, rather than your calm and unclouded and sane mindset at the moment. And you don't want to do that. I mean, it's obvious. I mean, it's not rocket science. None of what I'm saying here really is. But I guess reinforcing all these individual things as part of a bigger thing that's very complex, stressful at time, emotionally draining, being impatient about something not going as fast as one wants. I know it happens to the best, but the most important thing is the market also doesn't give a shit. So if you don't get those things right, or at least a huge chunk from those things, that nobody says be all of this tomorrow or next week or next month. I'm doing this shit for many years now, and I'm still not where I want to be. I still learn every day on different layers, and so it's good to talk about those things and reinforce it. So one step after the other. But if one key thing or two key things, I'd say, after all this rambling for 1 hour now, you want to take for yourself, then it's really, really, really capital preservation. If you don't have a good opinion about a chart at the moment, then just do nothing and wait for whatever you need for the market to do to give you the confidence to take a trade and preserve your capital. Capital preservation is greater than alpha or gains, always. And if you then get the confidence or a signal back that you say, now I think I got an informed decision for a good trade, then you can take that risk and try to make some gains based on the risk you want to take. But if not, then just do nothing. That's perfectly fine. Cash is a position, patience is a virtue and king. So, yeah. At this point, I guess I'm going to repeat myself, but I'm over my bullet point or a list of bullet points, basically. So I don't know. I didn't check the chat in between. Sorry if somebody wrote anything. It was a long rambling. Okay. No additional questions so far. I'm sorry if that was tiresome or very repetitive. It's a very complex topic. And there are probably more things that could be said and more things that others should tell. But yeah, that's for now all I got. What did you write there? Apart from sin, king, shit flags. I don't know. Yeah. Yeah, so that's all I got for now. I blew out all my capital in one shot now. I will probably have aftermath thoughts, things that I would have liked to add, but for the moment, I guess that's good. I will share again later the 2 videos. Oh, it's YouTube videos, quote unquote, but it's more or less just audio listenings. I like them a lot lately. Really from a Wall Street guy, so there's probably a lot of more slices to take in for that specific topic. Yeah, you're welcome, guys. So, 11, did you check the questions forum? Sorry, I didn't catch up to other things than the risk management topic. If we have anything priority or if we are done for today, more or less. More or less. Okay, let me just quickly check it. Could you post this list in the knowledge section? Yeah, I can post it there. Yeah, so we have basically 2 more questions about FIP level setups and simple setups to find, and I guess it's worth it to just go over some things maybe next session if there's no bigger topic to talk about like risk management. That was also a topic by heart asked by Ordo. Yeah, about a week ago. Rightfully so, with the historic crash right before. So yeah, if none of you guys have anything from here, then I would let it go. Say thanks to you all for coming, joining so plenty, and providing all the questions. It's pretty nice. Always looking forward to the streams and always happy for so many joiners and all the appreciation. Yeah, community appreciation is really worth a lot, and also seeing people develop, forging their own paths, and hopefully they can keep, you guys can keep going all together with us. Yeah. So with that, I would call it quits. Wish you all a good one. Have a nice morning, evening, midday, wherever you are. And yeah. Otherwise, see you next week, same time, same place. Bye.